Hey everyone, me Kevin here. In this video, we're going to talk real estate. We're going to talk not only about expectations on how many people we think are actually going to get evicted, how many households, we're going to talk about inflation, and we're going to talk about the new people competing for homes right now, some updated statistics here. We're also going to talk about what I am doing in this market and when I expect things to get potentially juicy in this market. We shall see. But let's get right into it. Of course, right after I mention that the amazing programs on Building Your Wealth have a coupon code expiring today. Today is Jack's birthday. Did just celebrate Jack's birthday with pizza, Topo Chico cake. It was really cool. We also had a piñata. Jack destroyed the Minecraft piñata in 2 hits. He 2-hit it! Anyway, let's get into it. So, first, Goldman Sachs expects 750,000 households will be evicted during this eviction crisis. That is because presently there are about 2.5 to 3.5 million households who are significantly behind on their rents, and we're still waiting for that darn rental relief to come in. We've only had about 10% of rental relief actually come in, and I just had a commenter on my last video on real estate complain that their father was one of the lucky 10% of people who got rent relief, but only because they actually called the governor's office in Texas to try to get rent relief. California is no better. In fact, California is one of the worst off, so people should be calling Governor Newsom's office. But I'll tell you, this has been a disaster getting rent relief money out. And therefore, Goldman Sachs believes that 750,000 households are going to get evicted because landlords are just going to say, we've had enough. Now, this is somewhat of an issue because it obviously displaces a lot of folks, but Goldman Sachs actually believes that these evictions, going macro here, because it's definitely not something you want to think about if you're a tenant. But going macro here, Goldman Sachs actually thinks this might help us ease inflation. And remember the type of environment we're in right now. In the summer, we had really, really high inflation because of those airline tickets and used car prices and wedding dresses and, well, women's dresses, things going up in price, right? Well, those have started to inflect down. But now we think, well, inflation could stay high if shelter costs go up. So that way, while car prices and dresses and these other things that were going up 7-8% month over month, while those go down, if rent prices now go up on the CPI readings, then you could end up having hotter than expected inflation for longer. But if we have an eviction crisis and that ends up driving down rents, well, now all of a sudden you push inflation potentially down because you have more housing stock available, you have lower rent expectations, and potentially a softening in the appreciation of real estate prices. So this rental relief, or rather I should say this eviction crisis, isn't really being pegged as something that might crash the market, but rather something that could, in a horrible way, actually be good for less inflation. That's very weird, and it's very, like, just saying those words sounds bad, that anything related to evictions could be good, because obviously every time we look at an individual eviction, there's a story there, there's a family there are reasons there are landlords suffering, there are tenants suffering, there's suffering happening, right? But zooming out on the macro, Goldman Sachs is taking the business approach and going, oh, it could actually reduce inflation. Crazy, especially since last week the Dallas Fed published a report expecting rents to skyrocket, suggesting that home prices are just a leading indicator of rent increases to come. They showed all their fancy charts in terms of why this correlation exists, but I think it's intuitive enough to where I don't have to explain all those charts. They're essentially forecasting a big inflation coming in rents, but maybe not as quickly as expected. They believe that rent inflation will be at least 3% by the end of 2022. And then in a weird way, between the end of 2022 and the end of 2023, end up hitting inflation for rents as high as 6.9%. Now, that ignores the rent inflation what we're seeing now, but they actually think we're going to see sort of this high rent inflation now, because we're already seeing rents go up, then maybe lower, and then a spike again in 2023, which might be around the same time we see a catalyst for interest rates in 2023. So this rent inflation is going to be something to pay attention to, and at least in the short to medium term, it sounds like, at least if you listen to Goldman Sachs' analysis, it sounds like the eviction crisis could actually help soften inflation. Now, in the meantime, we have some other statistics which are just mind-blowing, and it's worth mentioning here that if you're trying to find real estate, you can always check out Deal Machine. Go to metkevin.com/deals and try to send letters with Deal Machine to sellers before their properties hit the market. I'd say if there was any time to try, it'd be right before the eviction crisis. Get your name out there if you're looking to buy. metkevin.com/deals to use Deal Machine to send those. But anyway, let's get into this. Home prices in quarter 2, according to the Wall Street Journal, shot up at an annualized rate of 23%. The Wall Street Journal also just reported that asking prices on homes for rent rose 13% year over year, the highest increase in the last 5 years. So this is why I'm saying it's weird that we have this high rent appreciation now, or asking price appreciation. The Fed thinks we're going to see 3% at the end of the year, and then somehow 6.9% by the end of 2020, and then 6.9% by the end of 2023. Maybe the Fed is just broken with their estimates because the numbers are way higher right now. We'll see what the eviction crisis ends up doing to these things. Now, it's also worth mentioning that single-family homes are seeing more rent appreciation than apartments right now. Apartments are seeing about an 8.3% bump in rents, and we're also seeing that the best-case scenario for tenants is actually renewing your lease rather than getting back out into the market, because landlords are seeing an opportunity where when tenants leave, they bump rent values to current market value, whereas if a tenant's still there, you might get a smaller bump. We're seeing this at REITs, we're seeing this at syndicates, we're seeing this across the board. Now, it's also worth mentioning that there's been yet another shift. Usually 9 out of 10 home buyers are, well, home buyers. That is, they plan to live there, homeowner occupants. Well, this has shifted. So whereas usually we're at 90% are home buyers and 10% are investors, we've now had an inflection point, and we are at 84% of homes nationally going to home buyers and 16% going to investors. And if you go to certain markets like Atlanta, Phoenix, and Miami, 25% of single-family homes are now going to investors. So no wonder a lot of buyers have been getting discouraged. In fact, Redfin is now reporting that the share of homes with price drops is over 5%, as we're starting to see a little bit of a cooling, a little bit of a chill in the market, and we'll see how this chill plays in with a potential new flood of eviction-style properties. 750,000 households, if all of those ended up having evictions, and let's say half of them ended up coming on the market for sale, because just because a place has an eviction doesn't mean it's going to come up for sale. But let's just be generous here. Let's say half of them come up for sale, which I think it might be closer to a third or maybe even like 25 to 30%, somewhere around there, that would actually consider selling. Say half of them came up for sale. That'd be about 275,000 homes. 275,000 homes would add about 10% of our general national annual sales volume. So it's not like we're really expecting 10% more supply to all of a sudden crash the market, but if that supply comes hard and fast all at the same time, we could see some real volatility in real estate pricing, because all we've seen so far has been the exponential up. Now we've seen a little bit of a flattening, and I wouldn't be surprised if this sort of eviction crisis, this extra 10% of inventory, gives us a little bit of a divot in the market, or maybe even multiple divots in the market. We'll see what happens. We also know that builders are taking longer to complete houses thanks to the supply chain shortages, especially expensive raw materials, and the lack of available workers. So it's taking longer to alleviate our housing shortage, essentially. It's also worth noting that in July, bidding war rates were at their lowest rate since January. Right now, about 60.1 homes have a bidding war. And in June, we actually had 66.5% of homes going into bidding wars. And in April, we were at 74.1%. So you could kind of see this sort of slide down in the bidding war rate. All right, now let's try to consolidate all of this here. So we've got this potential softening of inflation due to the eviction crisis. We think the market might feel some divots because of this potential up to 10% more supply, might be as little as 5% more supply in the housing market. So you'll see those little sort of divots. I think those will create buying opportunities for folks. And of course, my heart goes out to those being evicted. I highly encourage landlords and tenants get involved with the available rent relief options. Please get rent relief so that way we can avoid evictions. But in the event that evictions do happen and properties come up for sale, obviously I will be looking to buy, and I encourage you to be looking to buy as well. And I would expect to find these between October and January. I think that's really going to be real estate buy time. I did just open up escrow on a property that I think has a nice $80,000 to $120,000 wedge. It's kind of in that range there, which is where I like to be, where I buy something, $715,000 house, and I think I can sell it or just own it and rent it out for somewhere between, at the bare minimum, $850,000, if not close to $900,000. So I think I did good there, especially since I think the property only needs about $45,000 to $50,000 worth of work. We shall see. But anyway, I'm in escrow. That means I am not phased so terribly by the eviction crisis, and I'm interested in potentially buying a few more properties during the eviction crisis. We'll see what happens if something ends up coming through. Hopefully, though, for just the sake of individuals and people, we end up getting that rent relief through as soon as possible. Now, in the meantime, if you want to learn more about do-it-yourself property management, rental renovations, real estate investing, stock investing, YouTube, making YouTube videos, being a real estate agent, make sure to go to the link down below, check out the programs on building your wealth, and if you want to be a real estate agent, you want to hang your license with EXP to start earning referrals when you refer people to EXP as well, check out my new referral link by going to metkevin.com/EXP. Thanks so much for watching, folks, and we'll see you in the next one. Good luck out there.